Happy Easter, 9:35 a.m. Pacific Standard Time. Today's date, 8/4/2012. We're taking a look at ISRG. It is a daily MMT platform, and we are taking a look at the actual peaks to the teeny reversals and how the bounces had occurred. And more importantly, ISRG, unlike other stocks, have had their in-term highs and their reversals put in for gains, and then bam, you get these bid pops for these nice gains off that bottom MMTs right off of these teeny lines right here. And right now, once again, you had a reversal, and on Monday morning, we're going to gap down lower on it, and we're going to be looking at ISRG down here at these lower levels. And what would a pullback be like? Just remember, it's an earnings preview, so let's make that clear. And it's an Easter special earnings preview, ISRG. When we look at peaks and reversals, we look at them in this order. And on ISRG, you still have the reversals just like Google. These are the leaders, okay? And both are going to report earnings. Google's going to report earnings Thursday the 12th, I believe. Confirm it, okay? So we have that is going to happen. Another thing that I want to show in relevance is going to be the NASDAQ 100. This is the NASDAQ 100. ISRG is up above here. This is the NASDAQ composite where the pointer is, MMT, in the videos. And once again, happy Easter to you. They both had something similar in common. They both had their reversals, except for the index below here in the video. It was all about shorting pre-market bull highs, meaning that when you get a bull high, everyone's in and you get these reversals back to the support levels. That's what it's about. Then buying at that support level, selling back up here where the original reversals levels had started. And what we would like to do is show you that the blue line is a standard public indicator called the 10-day moving average. And the MMT platform puts it in there to reference the general public's skill set as to what they're doing at that price level. You'll notice here that they were buying on the dip and you were closing up here at the high of that diamond. And you got diamond reversals that go clear across. Very simply, that's price delta resistance. Now, when you start a secondary reversal, you have to close below this daily half bar. And you did not. You bounced. So the two things in common is the 20-day simple moving average here on the NASDAQ composite. They were buying it and it closed toward the highs, and ISRG was being bought at its 10-day simple moving average going up here. Now, we would say for Monday that this could very well be at that resistance level, makes this subject to gapping down to 536 and printing lower on Monday morning, which will be tomorrow morning. Today is Easter morning, 9:30 a.m. Pacific Standard Time. So tomorrow morning will become upon us, and what we're going to be looking at is a complete weekly structure, but how both were being bought and how this reversal here, this overbought reversal called a double top, you reverse. That's what bull exhaustion and bull markets are about. Then you pop in the bull, then the bull comes down and tests lower levels. We'll set up for great buying opportunities in the NASDAQ comp as we move through the earnings season that is upon us tomorrow morning. And we will benchmark it today using the NASDAQ composite daily. And here's the ISRG trade. They report earnings, I believe, the following week. So we're going to be monitoring what the reversal patterns are in the bull reversal. See, and a bull. Now, notice that they both look similar because here, let's do this. Let me blow up this part for you again. So let's take it like this. Now let's put this here. All right, you can see the dips that where the breakouts had occurred. You can see where the diamonds are ascending on these daily breakouts. Now, on the reversal point, when we were shorting it up here, 550 puts, we made some good money, but we knew to get out down here because that 537 would not break, and it was testing that daily gap up in our system with that diamond. And see, you came right down and then buying to get out of ISRG right here, right back up to that diamond, and that was exactly 1, 2, 3 half delta movements. And what is a half delta movement in this case? $3.76 per line. So let's get that straight. That's what each one of the lines are worth. Then when we hit the bottom, you got long, back up here. But notice that the NASDAQ composite had its daily reversals and the similar pattern of reversals in play. That bar here to this gap down, that's the actual NASDAQ composite, because ISRG is a leader in that NASDAQ comp, which is a leader to the NASDAQ 100. And it's how you can identify them, MMTs, and correlate them and put them together and then put them in an executable format for a profit. Now, on Monday morning, it's because yes, you had a rebound at the 20-day simple moving average, and ISRG had a rebound at the 10-day simple moving average, and both closed at diamond highs. But let me tell you, on Monday morning, you can gap down lower in this area. That means that the broader market would open up on a lower low, the NASDAQ comp would, and ISRG would be part of that. And we'll be looking for this price level here, let's say 536.85, a $10 down move to that support on Monday morning, or sell down to it over the next day or two. And how do these systems right here, based on that diamond close and that diamond close, but on Monday morning, because there was a holiday, is what does that Monday morning gap down open futures look like? Well, we already went through it. You could gap down all the way down here and sell down on that NASDAQ composite. You come all the way down here to 3036. Yes, you can. And right now you're at 3080. You know, that's a 20-point haircut, but you can even break lower down to the 29, or let's say to the 3000, right above 3012 area right here. That's the gap down scenario. The gap up, which is very doubtful in the morning, is you would gap up and test your diamond reversals on Monday morning, then roll back over. And you could easily gap up, and if there was a gap, you would gap and test that diamond resistance in the NASDAQ comp, but the broader stocks in pre-market, one day after Easter, would all have to be gapping up together in order for this composite to gap up and run. And it would be the NASDAQ 100 that would be the one that would be tied to this. So let's conclude the fact that we're going to be looking at ISRG, how to trade the weekly options this week and ahead of next week's earnings report in week number 2 ISRG reports. And we're going to benchmark many different names, and I just want to let you know that this gap down, and here's where this ISRG, now during the earnings reporting session, of course it's going to be quite different, but we're going to get a pit stop somewhere right above here. We would fill in this area again. This is where that diamond pop happened right here. This was on 323 when ISRG came off its lateral base, ascending base breakout, and the diamond's closing on the high. And this is where we're at right here. So it's time to get busy to find out how to trade this going into the earnings. Then let ISRG report earnings in after hours, take advantage of trading the equity, and then thereafter, the following morning is when you would make the executable in the call side and or the put side of the market, because they will steal all the premium, so that after hours gap open or down, either or, will create the following morning buying opportunity. And what? It's this right here. To accomplish trading a weekly contract on ISRG right now. Now, the April 13th, the monthly expiration during its actual, remember that ISRG, this is a monthly contract that can be traded at various strike prices. It's not like they have a lot of open interest on these contracts, so we can tell what is out of the norm or what is not on both sides. This is the call side. Of course, this is the put side of the market. So we'll be doing various different setup structures going out to May, but most importantly is in this segment is how do I trade this week's options expiration with ISRG, which is 1 week prior to the company reporting its earnings, and how do you take that capital gain out of the call side and the put side of the market. Now, that's what we're going to be doing, and that will be in a different video. And I'm going to show my MMTs this monthly chart. 550 was those last highs up there. Now, we are going to do several trades on it all the way up to the earnings cycle. But here's a monthly chart and a standard one. And I'm just going to show the previous 2 months. These numbers over here, way up here on this monthly bar was 550. We have not closed above it. However, on any gap down on ISRG, we would be making that market maker entry. And here is this is the previous monthly bar right here on this monthly chart. And that's this month right here. And it made a high on 3/1 month during the month of February of 2012. Our high was 550.47, right where we were selling short. But let me just let you know that the low was 503. You had opened at 510. The high was 550, and then that low from that short up there, which was a $47 pullback short, was to 503.27. Yeah, it was. And then it popped like a rocket because we were long, and the close for the month ended back up at 541.75. All monthly, you know. So you know. And then in 4/1, we've started out like this. We open at that 536 where that support level was that I showed in the MMT platform. And I'll be happy to show it again. Here's the ISRG, and here are those price levels and that monthly level. Look at the portion of the monthly bar. Look at the low of this monthly bar here. That's a bullish and short term. But remember, earnings can change anything. It's how you make money out of it now and bank that profit going in to those earnings, which is about 10 days away or so. It'll be week number 2 MMTs. So this is that monthly bar, and down here in your application, you can see where 536 is. It's right over in this period of time. And here's 533. That's a half, but let's take a look. There's 541. Here's 538. You have to get back over here. That's 533. There was quite a pop on that gap because there was. Bam. So these level of support levels is reversal 1, come back up. We reversed twice, but we came here and we're holding 541.91 is the daily half bar support level. And the closing was 542. Okay? So basically, you have had exactly 1, 2, 3 reversal in the script, in the MMT market maker script. That's where the support level came in at 3 half deltas. 3 half deltas is $3.76 times 3 equals the dollar movement reversal, MMT. Then the dollar movement from the bottom back up was 1, 2 times $3.76. That's going to be Monday's market price action. Any gap down or any sell through here, if we gap below that 10-day simple moving average, we're going to start locking and loading. On a separate video, I will do the options. But this is that daily analysis. And not only that, as I said earlier, which I'm going to pull this out of the way just for 1 second, and I'm going to have you focus right here. in this video. I want this, just this caption. And what I'm going to do now is I'm going to give some prices out. And on a gap down Monday, and today is Sunday before the fact at 9:51 a.m. Pacific Standard Time, Easter morning. Happy Easter to everyone. And I want a 2 full delta gap down at 535.96 pennies. The first one delta in our system, I want it set at about 540. Let's just put it right around, I'll give you a big notice. It'll be right around 540, 90 cents. And then a half delta gap down on Monday morning. Let's go ahead and start setting that at 542 point. We want to be notified ahead of time, so it's 92 pennies. Let's just say 542.85 pennies. Okay? And once again, a half delta, a 2 delta is 535.96. And that's right down in here, slightly below that 10-day simple moving average, which is what the public is going to look at. However, each dip to that half bar bulletproof support level on ISRG has traded that way. But this is a pre-earnings 2 weeks ahead of the report. Not only that, it's how the market ISRG will open lower in the morning and either gap below here or gap 2 here, and then we start making the transaction in the call and put side. And this side, they would take all the side. The calls would lose all their value, and we would pop that